Hi, I'm Raymond Tong, Head of Research at Loftus Peak. Welcome to Update Plus, our monthly update on the big disruptive trends that are driving businesses and our portfolios. Last month, Tom Gilbertson and I travelled to the US to attend a number of investor conferences in New York. We also spent a few days in San Francisco in the Bay Area. This enabled us to meet and hear from over 30 companies exposed to the themes Loftus Peak invests into. Trips like these enable us to see up and close the effect these disruptive companies are having on industries globally and where the next wave of change may be occurring. For us, there were 4 key takeaways from the trip. Optimism in the semiconductor industry, a more uncertain near-term outlook for software companies, greater confidence around Netflix's advertising opportunity, and a fascinating experience in Waymo's autonomous ride-hailing service. Firstly, the semiconductor companies we met with are very optimistic. Clearly, generative AI is a tailwind, but demand trends are improving and recovering across different end markets, including smartphones, PCs, and a bottoming in markets such as autos and industrial. Specifically in AI, one of the companies we met with believes the market will underestimate the vastness of AI disruption and also the vastness of the opportunity for the chip industry. As we have discussed in previous updates, AI is spreading out from simply NVIDIA GPUs in data centers, but also onto devices like smartphones and PCs. This requires more powerful and more expensive chips and has the potential to drive a replacement cycle in these end markets. We believe a number of semiconductor companies, including Qualcomm and TSMC, are well positioned to continue to benefit from this. Secondly, and in contrast to semiconductors, software companies are facing some near-term uncertainties. From our meetings, certain parts of the industry are facing demand headwinds from macroeconomic uncertainty, competition from AI spend, as well as enterprises preparing for generative AI. On the last point, enterprises are moving to ensure their first-party data is in the right state with suitable guardrails. This will take time, but is essential in order to leverage generative AI in the most useful way. We believe that certain companies are navigating these challenges better than others. In the portfolios we manage, this includes our software holdings Microsoft, ServiceNow, and Adobe, where demand remains strong and they are well positioned to benefit from generative AI given their large customer bases, fast product innovation, and early signs of ROI on their new products. Thirdly, we met with a number of companies in the streaming ecosystem, and we came away more positive on Netflix's opportunity in advertising. Netflix's key ad tech partners are helping Netflix build out its ad tech capabilities. These include automation, data and analytics, targeting, and performance measurement. While this will not happen overnight, these investments will help the company win advertising dollars as the shift from linear TV to streaming accelerates. Furthermore, it appears that Netflix is on track to scale its advertising business and roll out its advertising tiers to more countries soon. Finally, Tom and I experienced a ride in a Waymo One, the autonomous ride-hailing service in San Francisco. This offered a fascinating glimpse into the future of autonomous transportation. Waymo is a subsidiary of Alphabet and uses technologies such as LiDAR, radar, high-definition cameras, and AI algorithms to drive autonomously. Since 2009, Waymo has logged over 40 million miles on public roads and over 1 billion miles in simulation, and it has established itself as a leader in the industry. Currently, Waymo operates its ride-hailing service in San Francisco, Los Angeles, and Phoenix. Hailing at Waymo One was seamless through the Waymo app, summoning an electric Jaguar EV that arrived just like an Uber. Inside, we could adjust the air conditioning and the music, and there were screens showing real-time navigation and data. The ride was smooth and efficient, navigating parked cars, pedestrians, and cyclists. Importantly, we felt safe, and the data Waymo has released suggests that its service has far fewer crashes than human drivers. While we feel widespread self-driving adoption is probably still years away, there will continue to be challenges such as regulatory and scaling. We felt the experience highlighted the potential for autonomous vehicles. Within the portfolios we manage, we believe a number of companies will benefit from the ongoing trend of cars becoming more software-enabled and digital. This not only includes Alphabet, the owner of Waymo, but also chip companies including ON Semiconductor and Qualcomm. I'm Raymond Tong. This is Update Plus. See you next month.